Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Thursday, January 26th, 2023. Before I get into the charts, just please click like if you would each and every time and subscribe if you haven't. You'll be notified then that each and every time we upload the daily Tesla or daily Apple report to the Wicked Stocks YouTube channel, and share the content if you would with friends and colleagues. So let's take a look at the big picture. I'm going to start with this chart as usual. Early December sell signal, 3 to 5 week sell signal down to this channel structure here that held. And once held, I'd mentioned that we could expect an upward retracement into the upper 150s to low ones to mid 160s, wherever this channel structure is at that time. It is dropping at a pretty progressive linear pace. It is this week on the weekly chart at 157.39 to 165.50. But on the daily chart, you can see up here 157.57 to 165.97. That may be relevant today. They beat earnings. I'm not quite sure, of course, what we can expect. Sometimes you get positive earnings and the market actually drops. But let's actually talk about the day itself. This is, this channel top that we settled above about 3 or 4 days ago early in the week is now at 128.32, well below the market. I've reduced its significance, and I am more or less hinging today and through the rest of the week at 134.67, this former trend line, as you recall, that held about a week ago. We fell off for a day, closed above it, and following that settlement above the 134.67 trend line, I've been anticipating the 157.57 to 165.97 region as a 1 to 2 week objective. So that remains in effect. And in fact, we've got a decent channel bottom today at 133.37. So I'm rounding everything up in the 133.37 to 134.67. 133.37 is the rising channel bottom, and 134.67 is once again that long-term trend line. So together, those two levels can absorb selling possibly through next week, and above which the targeted 157.57 to 165.97 region is likely by the end of next week. On the way up today, we've got 156.62, which is a 3-week rising channel top. And in fact, pushing through, that would be Tuesday's high of 146.50 that you can see here. We could actually reach quite easily, as you could see on this chart, 156.62 on an intraday basis, rising daily, very close now to that 157.57 level, which on the daily chart comes in right here. The same structures on the weekly chart that I showed earlier, 157.57 to 165.97. This upper area, if tested today, for instance, can contain buying through February. And from here, as I've been saying, we can fall back into this channel zone within, 3 to 5 weeks, a full month, 2 at the most. It is dropping on a gradual basis, and it will be this 92.35 in the 80s next week, the upper 80s. And so this area in reach within, let's just say, 2 months or sooner of testing that 157.57 to 165.97 region. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. So that is like the big picture. Now, if we were to close above the, where are we here? There we are, 165.50 level. I don't see that this week. We may by the end of next week. But if we close tomorrow above, that is the week itself, Friday, above 165.50. I just said tomorrow. I know I'm confusing people right now. What does he mean tomorrow? because I am recording this on Wednesday afternoon. So I'm always talking as if I'm already in the day in question. I'm talking right now as if it is Thursday. So please forgive me for the misnomer, if you will. If we close Friday above 165.50, then we enter another buy phase that should play out over the following 2 to 3 months into the 230s, 240s. This new descending channel top this week at 260.93 becomes then a 2 to 3 month target. So this 157.39 to 165.50 region on the weekly chart is significant. It can contain buying into the second quarter. And from here, once again, we can fall back to this channel zone, which is dropping at a linear pace. And I'll be notifying you, of course, of its exact location as we move through time. But if we close above 165.50, this channel structure becomes our next 2 to 3 month target. And I keep belaboring this point because one thing I want to mention is if we settle the week above 165.50, you can reach for 230 or 240 out of the money calls that don't expire. I would go 6 months out to preserve your delta on the way up and be less, immune to the theta value, the time decay value. Inversely, as we push into the 157 to 165 region, you could scout out 80 out of the money puts. If your time horizon is 2 to 3 months, most of you are more swing traders, day traders, 2 to 3 week position traders. So the 2 to 3 week position trader would be liquidating in the 157, 165 handle in anticipation perhaps of the low to mid 130s, 133.37 to 134.67. So, that is one idea. Let's continue on. I'm going to kind of rifle through some of these charts and mention that if we sell off on Thursday and settle the day below 133.37, this market should fall to 119.45 within a matter of 2 to 3 days. This is a new rising 2/3 speed line that can contain selling on a weekly basis. A week is a long time in this highly volatile stock. And so from there, we could rally back. And we'll just take our buy signals from there one day at a time. At this point in time, it would be back above 134.67, whereby we could then anticipate the upper 150s within a week or two of closing back above 134.67. But if we were to close below 119.45 in the coming, I don't want to say days because I'm not expecting it, but over the next week or so, if we were to close below the 119.45 speed line, that would pivot the market aggressively south into later February, and I would then expect that 92.35 area once again within probably a week, 2 at the most, in this zone, once again, 92.35 to 104.05, able to contain selling into March, and from there we could rally back up to, you guessed it, the upper 150s to mid 160s, wherever these line studies are at that time. So, I think that pretty much rounds it out for today's Daily Tesla Report. Of course, I'll be back tomorrow with Fridays. Please click like and subscribe if you haven't already. I'll be back tomorrow. You have a great day.